Hi, good morning, colleagues. This is Donna Lascala and Steve Linker coming to you today to tell you about our session that will be held during the upcoming New York State Council on Divorce Mediation annual conference. The name of our session is Inequitable Distribution, Common Mistakes, Pitfalls, and the reasons why these mistakes are made when we're talking about assets in divorce. So we're going to break up into groups during this session. It's going to be totally interactive. Everyone is going to receive the same fact pattern. We're probably going to assign to each of the groups one specific area of the fact pattern to focus on so that there's not a lot of overlap when we come back together as a general session group. In that fact pattern, we're going to talk about hidden assets. We're going to talk about common taxation mistakes of assets in equitable distribution. We're also going to talk about how to deal with different types of retirement accounts and why sometimes you cannot compare apples to apples when you're dealing with different types of retirement assets. We're also going to talk about the common mistakes in using things like life insurance and annuities in equitable distribution for the couples that we're dealing with. We've talked about a lot of this stuff individually by category in different meetings, but this is going to be an opportunity for everyone to work as a case study and go through from beginning to end, dealing with the fact pattern of assets that couples bring to the table when they're discussing their divorce, and why sometimes, even though it looks like the distribution is equitable, it's really not, and why those things happen. So, Steve, do you want to add to this as far as the taxation issues are concerned with equitable distribution?
Sure. I just want to say that I wanted to emphasize how surprising it may be that even in the most amicable mediation divorces, that a property spouse can be hiding assets from the non-property spouse. And of course, the taxation issues are very important and very often inadvertently ignored because there could be liabilities down the road that when property is distributed to the non-property spouse, all of a sudden he or she is going to be faced with tax consequences and does not recognize the full amount of the money or property that that was distributed to that person. So it's very important for us to bring up all of those taxation issues. And the red flags of fraud are alive and well, even in the most peaceful mediation cases. So we're going to be pointing all of that out to you.
And some of the mistakes that are being made inadvertently because we don't know the whole story. So the point of this session really is to show you some of the ins and outs of uncovering the things that you need to know and the little nuances of things like life insurance versus annuities, or retirement assets that may not be plain vanilla 401k IRA. There are things that need to be done and discussed and looked at in greater detail because of the complexity of those particular assets.
Yeah. This session will be very informative and somewhat entertaining. So we look forward to seeing you.
Absolutely. We'll see you then.